Steve here. Now, we're not going to talk about how Norway struck oil. Everyone knows that story. What we're talking about today is what they did with all that money. See, they didn't go out and build golden palaces. No, they built a fortress, a financial fortress. So let's get right to it. Look at this number, $2.2 trillion. That's the value of Norway's government pension fund global. You know, a number that big, it's almost meaningless, right? It's just abstract. But I'm going to make it mean something for you. Now, this is where it gets really interesting. 1.5%. Seems small, doesn't it? Almost insignificant. But what this little number represents, well, it's the absolute key to their entire global strategy. 1.5% of every single listed company on the planet. That's right. The country of Norway owns a piece of everything. Think about that. When the global economy does well, the entire nation gets a raise. They're not just an oil state anymore. Far from it.
So you see, they've completely transformed themselves. They went from being an oil state to a global investor. In fact, you could argue they're the world's most successful and definitely most disciplined hedge fund. And this didn't happen by accident. No, this was by design. It was a doctrine.
And at the very heart of that doctrine is one simple but ironclad rule. They call it the handbrake, and it represents a level of financial discipline that most other nations, especially the United States, well, they can't seem to even begin to understand.
So here it is. The rule is simple. The government is only allowed to spend the long-term expected return of the fund. That's it. It's estimated to be about 3% a year. They never, ever touch the principal capital. That means the piggy bank itself is never depleted. It only grows. This is the absolute bedrock of their entire national strategy.
And what's the result of that incredible discipline? Well, here you go. That little 3% allowance, it pays for 27%, more than a quarter, of their entire national budget. We're talking hospitals, schools, roads, all of it, paid for by dividends from companies all over the world.
Think about the genius of this. It's like financial alchemy. They took a finite resource, black gold, oil, something that will eventually run out, and they turned it into a permanent, self-sustaining money tree, a machine that will just keep funding their country for generations and generations to come. But here's the thing. This fund isn't just sitting there collecting dust. It's not static. It is actively and brilliantly managed. And they have a very clear vision of the future. And that future, in their view, is all about one thing: artificial intelligence. And if you want proof their strategy is working, just look at last year. A 15.1% return. Absolutely staggering. A massive payday. So, the big question is, how did they pull it off? Simple. They saw the future coming and they placed their bets. They went in early and they went in heavy on the tech Goliaths. We're talking about the big players. NVIDIA, Microsoft. They basically bought a ticket on the AI rocket ship and rode it all the way up. And this right here, this is their core philosophy. It's brilliant, really. They're using the profits from yesterday's energy, oil, to buy a huge stake in tomorrow's intelligence, AI and compute. They understood the global economy was making a fundamental shift, and they got ahead of it. But don't get me wrong, this isn't some reckless gamble on a handful of tech stocks. The real strength, the stability of this whole thing, comes from its massive diversification. They hold stakes in over 7,000 companies. For Norway to actually go broke, the entire global economy would have to collapse. It's an incredibly robust portfolio. Okay, so this all brings us to the final and I think most important point, a really stark contrast. We're looking at two totally different ways of building a country's wealth, two fundamentally opposed financial philosophies. On one side, you've got Norway, the anti-Goliath, a nation whose prosperity is built on a massive foundation of record savings. And on the other side, you've got the Goliath, the US. A booming market, yes, but one built on a foundation of record and constantly climbing debt. And here's what that debt looks like. $39 trillion. So let's be very clear about the difference here. While Norway is paying for its future using investment returns, the US is borrowing billions every single day just to pay for today. The contrast, frankly, couldn't be more staggering. You know, when you boil it all down, the story of Norway's fund isn't about getting lucky with oil. It's about what came after. It's about discipline. It's proof that a small nation can own a piece of the entire world if it just has the foresight and the discipline to wait. So in the end, it really comes down to this. You can get lost in the day-to-day noise of the market, the ups and downs,
Or you can focus on the one number that actually matters, the only number that truly buys a future. And that's the total return. It's everything.